kick it off now with this top story, a market milestone. The Dow Industrials closing above 22,000 for the first time ever yesterday, showing no signs of slowing down. The blue chip index is now up 11% for the year. It is up better than 20% since President Trump's election back in November. Joining us right now is ICMA-RC Chief Investment Officer Wayne Wicker. Wayne, great to see you.
Hey, Maria, how are you today?
Thank you so much for joining us this morning.
Of course.
This market, on fire. Would you put new money to work here? Is this rally sustainable?
I think the rally is sustainable. Look at earnings right now. We had first quarter 14% growth. We're now probably going to have 11% growth this quarter. You know, stock prices typically follow earnings. I think we're on a roll here right now.
You like technology, financials, what? What leads it?
I like technology. I like financials. I like them for different reasons. Technology, they have earnings momentum, but I also think, you know, they benefit from a weaker dollar, and there's a real positive here. Financials, I think deregulation is in place going on in Washington right now. That should really benefit an industry like financials, big banks.
What looks inexpensive here, just in terms of sectors? Because the market doesn't look wildly overvalued,
right.
But there's a, you know, the price tags are high. So what sector looks undervalued?
So right now, I don't know if you look across sectors, if anything really looks undervalued. You know, you have some sectors that are down, like energy, because energy has obviously experienced a negative number in terms of oil. Having said that, I think the way to look at it is which areas are going to have the most earnings growth, because earnings growth will support higher valuations over a period of time. And that is how this market is driving forward quarter after quarter right now.
So what is that, technology then? What has the best growth, as Jagan's asking?
Well, I think that financials have really strong growth year over year, and technology is set up for big growth. I think in the second half of the year, think about this as a call option maybe, with earnings growth driving it. And if anything gets done in Washington, D.C., that gives you, I think, additional momentum going into 2018.
Well, that's the political question, right? Because people were talking about the Trump rally for months.
Right.
Because the market was anticipating Obamacare repeal, tax reform. One of those looks stalled. The other one is just getting started. Does this continued rally suggest to you that the markets believe ultimately the Republicans are going to get something done on taxes?
See, I think that the market is really shifting focus to earnings right now. I think that they have been disappointed with all of what you've just talked about on the administration. But having said that, if in the fourth quarter of this year we start to get something in terms of tax relief, that will really bring, I think, a second tier of catalysts to the market for the first quarter of next year.
So it keeps going up, because the president celebrated yesterday at the White House, talking about the Dow hitting a record high, and he basically said it's going to keep going. Here's what he had to say.
The stock market hit an all-time record high today, over 22,000. We've picked up substantially now more than $4 trillion in net worth in terms of our country, our stocks, our companies. We have a growth rate, a GDP, which has been much higher than, as you know, anybody anticipated, except maybe us. But it's going to go up. It's going to go higher too. We're doing a job.
You agree with that?
I do agree.
You think it goes higher, especially if they get tax reform out?
I think that that is what people are hanging on to. They're hanging on that something's going to get done in Washington, and that's why people, despite the fact that valuations are higher, you don't see people pulling out of the market. They don't want to miss out in case that Trump rally does come back.
Yeah, what were you going to say, David?
Because we focus on what is falling in the laps of Congress, whether it's the health care reform that went nowhere and then the tax reform that the market's looking at. But we always have to point out what the Trump administration has already done in terms of rolling back rules and regulations, whether it's in the Labor Department, whether it is about fracking and oil production in this country.
And
about the regulations on financial firms. But there's another really incredible statistic, not just rolling back, but in terms of new rulemaking, including final rules, they're down 40% from the peak under President Obama at a 17-year low. This is in the first 6 months of President Trump being in office.
Such a huge, important point.
Yeah.
Wayne, you know, the Washington Post ran an article yesterday that talked about the fact that with these great Dow numbers, only 50% of Americans can really even benefit from that. They mentioned that with people with incomes under $30,000, only about 21% are actually in the market. Can you kind of debunk those myths, though? Because, of course, people are going to try to, you know, paint this into a bad picture. But can you kind of debunk those myths that, oh, you know, these numbers don't really affect normal, everyday Americans? Are we finally going to see you know, maybe wages go up for workers as a result of this market, or what's the impact on the everyday American?
Well, see, the way I think about it is as earnings are going higher and you're seeing more and more jobs come into the market. We saw that again yesterday with a change in the June employment number, up another 35,000 from the revision. That's benefiting everybody in the United States, right? And so as corporate America becomes stronger, provides the opportunity for more jobs and possibly more wage growth as we move higher.
There is a ripple effect because, first of all, you're talking about 401ks and retirement plans and pension plans. So you have to believe there's a trickle-down effect in terms of the impact that a 22,000 Dow Jones Industrial Average has. Not just those people who own individual stocks like the institutions. Do you agree with that?
I absolutely agree with that.
All right.